Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
This meeting is being recorded.
We are back with another episode of the Real Estate Investing Club. Today we have Curiel with us from Associates in Real Estate Holdings. This is going to be a fun one because we are talking about the most passive of real estate investments, which is investing in notes. We've had a few note guys on here before. I love talking about this because it really is the absolute most passive you can become in real estate unless you're an LP in a deal. So Al, I'm super excited to have you on. Thanks for hopping on the show.
Thanks for having me, Gabe. Great to be here.
Absolutely. I told you before we got on here, we like starting with stories. So why don't you take us back to the beginning of your real estate story? How'd you get started in real estate?
It's a long one, but I'll try to be as brief as I can. I'm an old man. I'm 62 years old, and I got started in this gig back in
62 years young, right?
That's right. I got started back in my 20s,
okay.
1983, I want to say.
All right.
Started going into business with my brother, and we started into the fix and flip / rental business with no training whatsoever. It was basically reading books from Dave Delgado and Carlton Sheets. These are names that probably don't mean anything to your audience, but they were the gurus at the time. So I didn't have any formal training. It was basically all reading books and doing it. I'm a doer. I don't plan. I just execute, right? So my brother Carlos and I went into business and got our first rental, and it was a complete disaster, Gabe. I'm not going to sugarcoat it. It was a complete disaster. It was a quad building. It was horizontal, not vertical. So all the tenants were living in separate places.
Okay.
And one was a stripper. She was not paying the rent on time.
Okay.
The other one raised chinchillas, and the place stunk.
That's got to be dirty.
It was awful. The third was the owner lived there, and it was okay. But he was a motivated seller. Let's put it that way.
Right.
And the last couple that were there were so delinquent in everything that they did that their utilities had been turned off, and they were using. Are you ready for this? They were using the bathtub as their grill.
Oh, gross.
Putting charcoal in there and putting some kind of a crate on there, and they were grilling
Christ.
and what have you. It was a complete disaster. So we laughed it off and we continued. We just, we spent every single last dime we had and invested in that rental. We sold it 6 months later at a loss, but we just kept going. It was awful. We decided that, that was the one-off. We continued with a little more knowledge and experience and everything, a couple more gray hairs early on in my life. And then we perfected, I want to say, the art of rentals until Dark Monday of 1989 when the market collapsed. So we were highly leveraged, Dave, and we had 36 units, 36 doors, and we lost it all because we were heavy leveraged and we were in our 20s, obviously. So we decided to pivot and go to another portion of the market, which was the fix and flip. And we were successful in that, had another maybe 40 or so units in the fix and flip arena. But then we had another correction in the market, which was the prelude to Y2K. People were in a state of panic. If you read the papers, you go back in history, you'll see that there was a whole lot of adjustment to the interest rate, to the market.
Yeah, isn't that interest rates in the 90s? Didn't they hit like double digits at some point?
It was 12%, 12 to 18%. And so if by comparison, we're not in a bad place right now compared to what happened when we moved away from the gold standard back in 1973, back to 89, and now Y2K with a panic. And many people don't even realize what it took to prepare for that. So we had to pivot again, and we continued with wholesaling. Okay. So we went to the wholesaling aspect of it, just selling contracts, assigning contracts, and what have you, until we had a little thing called the subprime market, collapse in 2008, 9, and 10.
Heard about that one. Yep.
Right. It was pretty awful as well. So at that juncture, my brother, who at the time now had a family and kids, said, "What now, Einstein? What are we going to do?" And he says, he's an engineer by trade. So he says, I can't continue to do this gig with the market correction all the time. And I said, we just need to be prepared. That's all. We can move with the market, but if you have low risk tolerance because you have a family, I totally understand. So I became a one-man operation back in 2008, started doing some research, Gabe, and because of the dried inventory, I was forced to find out what was going on with the inventory foreclosures and everything else. That's when I discovered performing and non-performing notes. And I identified some hedge funds and some banks that were trying to get rid of their inventory, that they didn't have enough manpower to have the lawyers file so many foreclosures on so many people because of the market. And they didn't have the power to process all the paperwork, the personnel. So I found out that some of these banks were selling those mortgages to hedge funds that were selling these loans by the case and selling them by the bottle to small investors like me. So I found out who those hedge funds were. I'm a stubborn son of a gun. I don't give up easily. And I got in the weeds and I called the Bank of Americas of the world, the Wells Fargo's of the world. And I said, who are you selling these mortgages to that are in default? And one or two told me, well, we package them to hedge funds like General or like Digital or like PSI or FCI or whatever. And then you guys can bid on them through indicative offers, and you can buy the loans at a discount. So just to give you an example, without getting very, very deep in the weeds on this, Gabe, if there's a loan for $100,000 back in 2008, I can buy that loan from that hedge fund that used to belong to, like, say, Bank of America for something as little as $13,000.
Wow. Okay.
So just like you can rehab a house, you can rehab a loan, right? And the way to do it is by contacting the working things out with the homeowner. So you essentially take the role of the bank. And after you make the note whole again and you start rehabbing it, you can either keep it for truly passive income. You are not a landlord. You don't deal with tenants, toilets, or trash. You get a servicing company that is going to administer the escrows, insurance, taxes, and everything else. And the rest of the money, the difference, goes into Pocket National Bank, right? Your bank. Yep. So that is a practice that I have done for the last, since 2010, actually, when I discovered this, to now, so going on 13 years. And right around the second year, when I started making some serious cash, I had to scale. I no longer had my brother to help me out with any of this. So I had to scale, and that's when I discovered the power of virtual assistants. There are virtual assistants and there are virtual assistants, right? So it's hit and miss. I'm not gonna lie to you. I had my issues with VAs, and I kept searching and searching and searching until I found the right mix. I have a staff of 5 that I pay $5 to $7 an hour. I have them diversified. I have a sales department. I have a due diligence department, and I have a uploading of information in social media department. Okay. And the folks, I have 2 folks in the Philippines, 2 folks in Jamaica, and 1 person in India. The person in India handles all my coding, website, all that other stuff that as the old man that I am, I have no interest in pursuing, right?
None of us do, really. It doesn't matter how old you are. We don't want to have to do that.
I am awful at it, babe. I mean, Gabe, I can't even, if it wasn't for email and I still type like this, right? I mean, I'd be a babe in the woods. Yeah. So I have the person in India handling all of my website stuff, coding and what have you. The 2 folks in the Philippines handled the social media and uploading and downloading of information, due diligence, et cetera, and so on. And then the folks in Jamaica do my sales. I have a sales manager that I have no, this person, she's no longer on a salary. She is now on a commission basis because I am moving so much inventory day in and day out.
Nice.
So that's in a nutshell. And I know we have
man.
with what we do.
I love it. And, I love having people like you on because you come to the show with so much experience, so much wisdom. I counted, what was that? 3 downturns that you've gone through, and
three downturns, everyone in every decade. Yes.
Yeah. And so, 2008, I was alive. I was around at that point. And I wasn't in real estate at that point, but it was a big deal. But we always think that these crises are once in a million and it's the end of the world, but they happen over and over again. And there's always a light at the other side of that downturn. You just got to make it through it. And so I'm glad you came on to kind of share both the highs and the lows, because it sounds like you started with rentals, you pivoted, went into fix and flips, pivoted into wholesaling, finally into notes.
My niche. Yes.
Yep. Which is great to see, because, if you're going down a path and it's not working, there's so many different opportunities here in real estate, so many different ways to do it. So let's pigeon us right down to note investing. You've already given a great overview of it. I love that. You mentioned, while you were going through your overview of it, you talked about rehabbing notes. So my first question, the first question that I have that I've asked a few other guys is how you find notes. Before we get into that, though, I want to talk about the rehabbing notes, and then kind of you mentioned rehabbing. Let's just go into that. What do you mean by rehabbing a note?
Sure. What happens is when you buy a non-performing note, that non-performing note is basically what the name denotes, right? It's not paying. They're either 30 days behind, 45 days behind, or 60 days behind, whatever the issue is. So sometimes they have a rolling 45, sometimes they have rolling 30s. I don't know if your audience might know what that is. That means that these people try to catch up all the time. They don't necessarily stop paying mortgages, but they are always a month or two in arrears, or 45 days, right? So that's what that means. So the bank gets tired of that, and they said, we don't want to deal with this, but we don't have the manpower to file foreclosure proceedings on everybody. So they sell me the note. So I buy this note, and again, I'll give you to keep it really, really simple. I buy the. I ask the servicing company. I can't do it personally. The servicing company says, okay, Mr. Smith, Bank of America is no longer your bank. Now Associates in Real Estate Holdings is your bank, and today's your lucky day. And that's one of the ways that we can rehab a loan. Today's your lucky day. Why is my day today my lucky day? I've been trying to deal with Bank of America for 4 months, and nobody's giving me the time of day. Well, that was them. This is now. And so Associates is going to take a real personal approach to your plight, and we like to be really tough on the problem and soft on the people. So that $90,000, that $100,000 loan that you have, we are going to reduce it to what the market of your house is now. I mean, times are tough, and sometimes they're upside down on the property. They have a $100,000 loan, and the house was 150, but now it's dropped to 90,000. Right? They're upside down. So we tell them we are going to reduce that balance from $100,000 to $90,000. You know that 8% interest that you were paying because you were high risk. Yeah, well, we're going to reduce that to 5%, something that's manageable for you. Now that you have a lesser paying job, and now you can afford to pay this. And you know that those 4 months, 5 months that you were behind on your mortgage, we're going to forget that, and we're going to put that at the back of the loan. So instead of making it a 30-year loan, we're going to make it a 30-year and 4 months loan. So you don't have to come up with any late fees or anything like that. Moreover, we are not going to report your delinquencies to the credit bureau. You got that? That's why today's your lucky day.
Nice.
What do you think they say, Gabe? What do you think they say? There's flowers in the bed.
Let's do it.
Right? There's flowers on the flower bed, and Mama don't want to move. Well, Dad looks like a hero because now he's able to work out a modification of the loan. That's strategy number one, to rehab a loan. So now I go from having a non-performing loan to now having a re-performing loan.
Okay.
Right, is re-performing. So I give them about 90 days trial, And I said, we're going to try this for 90 days where I'm going to reduce your interest rate and everything else, the terms of we're basically reworking the mortgage. Mm-hmm. And if it continues to be successful and you pay on time, then that's great. You continue to have this title. We just go on as always. You continue to pay the servicing company, and I keep the difference. Of course, I don't tell them that, but that's the premise behind it. So now let's say that 3 months go by, and Mr. Smith just loses his second job. Now he has no job. Now clearly he can't pay the mortgage. So now I'm going to say, okay, Mr. Smith, clearly you can't pay the mortgage. Why don't we part friends? All the stuff that you're delinquent on, I am not going to report to the credit bureau. Why don't I do a nice things for you? I'm going to back up the U-Haul. You put all your stuff in there. You leave the house painted and fresh, like you did when you first got your loan from the mortgage company. And upon inspection, if everything looks cool, I'll give you $1,000. You give me the keys to the deed in the house. 9 times out of 9, Gabe, they cooperate. You try to be conciliatory in your approach, not retaliatory, right? So again, because I've been around for so many years in this, I can kind of read people, I can read the dynamic, and 9 times out of 10, they'll say, "Yo, great." They'll go. They'll go, and I said, "You start a new life, get yourself an apartment that you can afford, and we're friends," right? That's the second strategy to rehab a loan. The third and final strategy, Gabe, is when all else fails, you go the foreclosure route. And there are times when people are so mean and so angry at the situation, not at me, my company, but at the situation, that they destroy the joint, and then we have a problem, right? So in that case, I just file the proceedings and foreclose them. Yeah. My key is, because I have so many investors on both coasts, the West Coast and the East Coast, is that I deal with the velocity of money when I sell my notes to investors. And that is, I can't afford, I don't invest in notes in my own backyard in the state of Illinois, where I'm from. Okay. Because this is a judicial state, and it takes about 290 some days to foreclose on somebody from cradle to grave. That's a long time. Yeah. Right. So what I do is I go to non-judicial states, primarily like states like Texas, Michigan, where if people get behind in their mortgages and it becomes absolutely necessary to foreclose upon them, it takes about 60 to 90 days. So my investors don't have to wait so long for their returns. So I go on those non-judicial states, and if I must foreclose on somebody, and I've only done it twice in my career in notes in the last 12 years that I've been doing this, twice, one in Michigan and one in Texas. It's taken 120 days in Michigan, actually, which is not bad. And so what I do is I take possession of the note now. So I'm no longer in the note business. Now I'm back in the real estate business. So I stick a sign on the front lawn, and I say, "For sale, owner will finance with to deserving buyer with a large enough down payment." Because if I advertise no credit, no job, no problem, guess what I'm going to get? Right? A lot of problem. So I'm not in the business of rehabbing. I'd rather make money with a pen than swinging a hammer. Yep. Right. Those days for me are long gone, and I don't begrudge the young guys that are doing it. Great, good for them. I'm not interested in doing that. This is a business that I can do anywhere in the world. I have a laptop and a phone, and that's it. You're in business, right? So that's basically, in a nutshell, my model.
Yeah, no, and again, thank you for the detail. I love it. So it sounds like there's basically 3 ways that you go about executing your strategy once you obtain the loan. Is you restructure the loan, you give cash for keys, or you go into foreclosure. Super simple, makes a lot of sense. And then once you do go into foreclosure, it sounds like you sell the property on the back end. Love it. It's a great, simple strategy. It's a very easy way to execute on these. How do you, every deal starts with finding the deal. So how do you go about finding these non-performing loans? Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
You become associated with the hedge funds, like I said, and I've acquired a list of 2,500 hedge funds that I contacted. Yeah, it's a lot of hedge funds. Some of them are no longer in existence, but I provide that free of charge to anybody that wants to have it. It's a matter of public record. So if anybody wants to listen to the show, wants to get that copy of that, I'll gladly send it to them. And you become insistent. You initially, 12, 13 years ago, they didn't know me from Adam, because these folks, these asset managers at these hedge funds have responsibilities. They have families, they have quotas to fulfill. And so my first call to them was, hey, Mr. Asset Manager, this is so-and-so from so-and-such company. Do you have any loans, non-performing loans, that you would like to get rid of this quarter? And you leave it at that. And you don't call on Monday, you don't call on Tuesday, you don't call on Wednesday because they're busy. As the week winds down, Thursday and Friday, the chances of them picking up the phone because they're trying to wrap up their week is greater. I usually call after 2 o'clock. I call the West Coast hedge funds a lot. Like my 5 o'clock is their 3 o'clock. And they pick up the phone. Now I've become friends with some of them. Some of them are no longer there, obviously. And they send you the inventory. They ask you, okay, fine, now that I know who you are, you become a real pain in the rear. Where do you want to buy? And I tell them I have, depending on my criteria, if I want to sell partials on the notes, anywhere in the country. If I want to, for my consumption, for my portfolio, I go to Texas and Michigan and some other states that I can mention later. But sometimes they send me a pool of 10 loans. Sometimes they send me a pool of 1 loan or 2 loans. So it all depends. That's how I get my inventory.
Nice. 2 p.m. I remember seeing an infographic, and it was talking about cold calling, talking about the best times to do cold calling. And I think 2 p.m. was actually one of them. It was like 2 or 3 p.m. was the best time during the day to get your cold calling done. So makes a lot of sense.
It works, Gabe. It works, Gabe. It really does.
Yep. All right. Last question before we go on to the quick question round. You're buying non-performing notes. And so you're not buying the note you're buying it at a discount. So what is the discount that you generally like to see to make it a deal for you?
I usually go for, right now, non-performing notes are not as cheap as the ones were back in 2008, where you can buy them for 14 cents on the dollar. That was a ridiculous number that probably won't come back ever. But non-performing notes right now are going for 65 to 75% of the marketplace, or what the market is bearing of the house, or 65 to 75% of the unpaid balance. And that's called the UPB. That acronym stands for unpaid balance, whichever is less. Gotcha. So again, $100,000 loan, I'm not going to go any higher than 75 cents on the dollar.
Makes sense.
Okay. For performing notes, the rate is going obviously higher. They're going up to 95% of the UPB. Yeah. But you get guaranteed income and you don't have to do a thing. You don't have to contact anybody. You just get the loan from Bank of America or the hedge fund, whatever. And you do is they do a hello letter, goodbye letter, and next month you get your check.
Yeah, I've had plenty of those notices come. Your loan has been sold to so-and-so. It's like,
right.
All right, sounds good.
Yeah, right.
Great. Well, hey, first, thank you very much. I love it when guests go into detail like you have. I'm sure it's, a lot of people listening have gotten some good gems. So it's time to jump into the quick question round. Are you ready?
I am.
Let's do it. It starts with education. Give me 2 recommendations, 1 for general life wisdom and 1 for real estate specific. Could be books, could be YouTube channels, whatever. 2 recommendations.
I would go with a book by the real estate book, Real Estate Without Renters by Kevin Shortell. He happens to be one of my mentors. He's a great guy, great book. I helped write one of the chapters in that book, the last chapter. So it's not self-promotion. He gets all the credit for it. It's a great book. He'll give the nuts and bolts of real estate investing without renters. And non-real estate book, I'm going to go with probably the best book that I've read in a decade, and that is written by Marie Forleo, and it's called Everything is Figure Outable.
Nice. I like that title because everything is figure outable. That's great.
It's right here. That's the book.
Everything is
great book. Life experiences. Everything is figure outable. Marie Forleo.
Great. Good recommendations. Next question is for your younger self. So let's go back to the owl who was doing that first fix and flip way back. I think you said 1983. Let's go back to that owl. Go up to him, look him in the eye, give him one piece of advice moving forward.
Do your research before you dive into anything. Do your research and make sure that your opportunity cost is greater than your actual downside.
Yes, you are the first person to say that. And I think the reason you're the first person to say that is you have the most wisdom here and you've been through the ups and downs. So you know you know what can come when you don't do your research.
I've gotten a lot of bumps and bruises from that, my friend.
Yeah, I see, you know, the farther I get into real estate, the more I realize the value in that. So good advice. Yes. Next question is about your business. The first three positions you hire are lay the foundation for how you operate. So what are the first three positions you hired for? And would you do it differently if you did it again today?
I would not do it differently. I started doing the research and I started doing what is the things that that I'm not good at, that I need expert tutelage on. And that was technology is one of them. Delegation is the second one. And sales is the third one.
All right. I love it. And these were all VAs that you hired?
Yes, all VAs. And there's a reason for that. The reason that I cap the activities by certain people. There's a certain belief of people that, you know, for the Jamaican folks, they are doing my sales because there's a tendency for people all over the place to not understand different accents from different people, and they have difficulty. So that is a negative thing because it brings the psyche of my VAs down because they don't feel that they are capable of doing the job, which is not at all true.
Right.
And also puts the question mark in the consumer's mind, and I don't want that either. A confused mind always says no.
Yeah.
So I want to diminish that as much as possible. I stand by the sidelines, and I have my staff meetings every Tuesday afternoon with everyone. What are you doing? Where are we going? And what are we going to do about it?
Nice. I like that line. A confused mind always says no. That is so true.
Yeah.
And it's a problem. I mean, I'm going to kind of step outside of the note side here, but it's a problem with seller financing that I found. I love seller financing. I love to kind of work with sellers to create a situation that works for both of us. But when you bring up seller financing, oftentimes the seller will get confused, and that the instant they get confused, they shut down, which is why you really got to understand it if you want to use that as a tool. So
exactly.
Yeah. I'm going to go back into the questions. This is about metros. The United States is a huge place, a lot of opportunity out there. Give me the number one metro you're most excited about investing in today.
Texas, Dallas, Texas is one of them. The second one is Detroit Metro.
Interesting.
Because the price band in those assets is so comfortable for just about anyone to get in. Anyone without any experience and notes can find the price band in that state to be exceedingly comfortable. And the third one that I have is Indianapolis, Indiana. Same, you know, everything in the Rust Belt of America is going to sell. And investors on the west side, on each coast, can't wrap their mind around the price band in the Midwest. Yeah. Because they're in San Francisco, a mailbox costs you $150,000, right? In Manhattan, you know, the right on this side of the east side of Manhattan, you're having rents of $8,500. It's ridiculous.
Yeah.
So buying a piece of real estate for $45,000 to them is like, oh my God, this is great. Yeah. So you can buy in bulk and get a greater return.
Yeah. It's interesting you said Detroit. I invest in Dallas and Indy are two metros that I love. They're great.
Mhm.
But Detroit, I haven't heard a lot of excitement about that. But I do know their price points are very low, which is good. And it's a good
Mhm.
renter market. So
It's great for rental market. It's great for seller financing, Gabe, because another strategy that I develop, and this is just a little bonus answer for your question, is as long wholesalers have a tendency to offer really low prices for these products, for these houses. But what if you become a deal architect and you tell the owner, okay, I'll give you your full ask of $45,000. I'm not going to give you 20 for your house. I'm not going to be like the rest of the wholesalers. What if I give you your ask of $45,000 as long as you accept my terms?
yep.
So
Price or
the guy's
term.
going to get his 45. He doesn't know. He just doesn't know when he's going to get his 45K. It could be in terms of no down payment, or you stack the loans first and a second. There's a variety of techniques that you can utilize there. So
Yep.
that's
Yeah,
why I say
and that works on the residential side. It works on commercial. We just did a deal in India, a self storage facility, where the seller wanted too much money, and we were like, okay, that's fine, we can give you that, but you need to accept our terms. And we got low interest rate, interest only payments. Yeah, it turned out to be a great deal because of the terms. So love
sweet.
that. Moving us, the next question is, about finding deals. And so I'm going to ask, we've already kind of covered this, but I'm going to ask it anyways. What is your favorite way to find good deals to invest in as a note investor?
Getting in touch with your existing hedge fund family of funds that you have on the non-performing notes, and then through my contacts and being in the industry, now I have wholesalers of notes that are out there that specialize in selling performing notes in bulk, and by bulk I mean 10 and above. Now we have enough capital behind us that we are able to afford to pay them what they want. So that comes with practice. That comes with exposure in the business and your reputation. So for performing notes, that's the best way that I can find.
And I'm going to sum that all up as relationships. We say it so many times on this podcast. Real estate is a relationship business. So make sure your reputation's intact and make sure you're treating everybody the way they should be treated, because that's where you live and die here from. So
without question.
All right. The next one is about relationships. It's about mentors. We all stand on the shoulders of giants. So who is one mentor who has contributed significantly to your career today?
Eddie Speed is my number one mentor. He is the owner and founder of Note School out of Dallas. And then a very short second is Kevin Shortell, whom I have mentioned before in his book. And those two gentlemen have taught me the ropes. There's coaches and there's mentors. I find that coaches just basically show you how things are done. Mentors really care and they want to see you succeed.
Nice. I love that. Okay, that leads us to the very last question. You've given us a lot to think about. I'm sure people who are interested in note investing are psyched right now. They want to get in contact with you. So what is the best way for people to reach out and get in contact with you?
Oh, well, thank you. The best way to reach me is by going to my website, Associates in Real Estate Holdings, or contacting me by way of info@associatesinrealestateholdings.com. We are having a 3-day webinar coming up at the end of June, where we teach people the nuts and bolts of note investing using the power of meditation as well. We need to change our mindset. So we teach them that anything is possible as long as you have a mindset reset.
Speaking my language there. I love that. All right. So that was info@associatesinrealestateholdings.com, also associatesinrealestateholdings.com. Side note here, you have a long email address just like myself. It's a pain, man. I got Gabe at the realestateinvestingclub.com way too long. So I feel your pain.
Yeah.
But I will put those links in the show notes. So if y'all want to reach out to Al, just click a little more in the description. It'll pull down that full description. And there you can find those those URLs if you don't want to spell them out. So Al, that wraps it up. Thank you very much for hopping on the show.
Gabe, thank you for having me. I had a lot of fun.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. And if you guys want to support the show, all we ask is you give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.